critical minerals. What do we mean by when we say the word critical minerals? Are all minerals critical minerals? Are some not? It's a bit opaque, and the reason why is because it's different depending on the country that you're in. And so let's start at the beginning here. In recent years, increasing geopolitical tension and corresponding supply chain disruption has resulted in governments looking more keenly at where certain critical inputs to their economies may leave them vulnerable in the event of supply shocks. And this kind of vulnerability is critical in some respects because of the types of technologies and outputs that these minerals make possible. You know, in the Canadian context, and I think in many contexts globally, one of those would be clean energy technology supporting a broader low carbon transition. And the minerals and metals that make possible the development of electric vehicles and other clean technologies are not universally available in every jurisdiction around the world. And so as countries look at what their own strategic domestic policies are relative to their access to these minerals and metals, they've assessed vulnerabilities in certain respects and have sought to address that. For general purposes, there's sort of two buckets of critical minerals. One could be sort of battery materials or clean energy materials more broadly, and the other would be rare earths, some of which move into the application in the clean technology space, but also have broader high-tech applications that are independent from that clean energy space. I think it's also worth noting that this process in the identification of supply chain vulnerabilities and critical minerals was underway prior to the advent of COVID-19. However, the implications that COVID has had on general population's experience of supply chain shocks has accelerated this process. If you think about your own context, wherever you may find yourself, may be different. In the Canadian context, there were shortages of certain key goods that people had almost universally taken for granted that they would be able to access these things. And when there were shortages, it brought this greater level of awareness of the criticality of supply chains for the quality of life that they take for granted. When we think about, and what I'm going to spend the rest of the presentation talking about, is the sort of dual pillars of critical minerals policy as I understand them. And those are security and sustainability in a carbon constrained world, and security of supply of those two materials. And I'm going to speak a little bit about how Canada's positioned vis-a-vis those two critical minerals policy priorities.
So this is our motto, is our value creation is through exploration, discovery, and sale. And that's how we want to deliver the shareholder value. The dedicated team I just mentioned on the previous slide, our strategy is very much focused in on North America. We've got projects in Alaska, 3 in total, main one being the District-Dale Golden Zone property. I'll be discussing that with a couple of slides. Same with Amanita, which is sitting right beside the Fort Knox mine. And in Nevada, we've got one project, but we're really not going to talk about that today. The subsidiary called High Tide, and that's the one that we'll be filing the preliminary prospectus as early as next week. There's two main projects, one called the Labrador West Iron Ore, which is in Labrador, and it sits right beside the Carroll Lake mine, which is Canada's largest mine, 23 million tons per year. And then the second project just over the border in Quebec, because that whole area at the southern Labrador Trough is busy geologically and mining wise. There's 4 operating mines in the area. And then just over the border in Quebec is our Lac Pegma, which is a copper nickel cobalt deposit. It's essentially about a 2 million ton deposit. It was discovered in 1996. I had the pleasure of being the geologist who drilled the discovery hole in it. And 26 years later, I come along and I was able to secure the project for the company. So very interesting couple of projects in those in that company.
Okay, so why invest now? I think commodity bull market is here. I'm going to walk you through that through some better metal takes, in lithium, nickel, cobalt, and uranium. In the industrial metals and coal, iron ore, which has pulled back recently, but copper and tin. Precious metals, which is sort of stuck in no man's land at the moment, but still in the bull market. And there's also a couple of good macro things, which I think I want to bring your attention. Save Canadian Mining is a personal project, a pet project, a advocacy group, which I'll talk about in a second. And it's about to do some things we hope to change the landscape in terms of stopping predatory short selling in the mining space and in other sectors in Canada, which would be wonderful for all investors. And then we'll also talk about just the macro overview of how right now, if you look at when commodity bulls come and you look at the TSXV as a proxy for the metals and mining industry, and you put it over the S&P, the ratio's at a low. So that's a good thing. So and it's starting to turn up. So.
If we want to get deeper into artificial intelligence, in order to succeed, first we need to mitigate all those data integrity issues. We need to make sure that we democratize all that data and we have one single source of the truth. And this is happening through a centralized data approach. That's very important. Next is, do we have a digital representation of all the assets? No, we can come back to the previous slide, sorry. Yeah, thank you. So do we have a digital representation of our assets? Typically, most companies will call it a digital twin. We can have that digital graphical representation, but the graphical aspect is another thing. I would say what's important is that we have the structure of our asset that is digitally represented. It will help us understand the context. In the plain example that I was giving you, it is quite significant to understand the whole context that goes with that asset. Also, having a real-time analytics that can be implemented into our operational data platform will allow us to get significant improvements, and then making sure that that platform where we're doing all of these things, these first steps, will integrate with artificial intelligence tools so that data scientists can eventually work easily with the data. And in fact, 53% of the data science time is actually spent on data preparation. So when we don't follow these steps, that's what happens, is that we spend more than half of the time preparing the data. With these recommendations, you will not have to spend all that time. Now, if we move to the next.
Yeah, I think the bounce back out of the COVID slowdown. Obviously, you had some activity come out of that, and there was financing around, and I think that was fairly positive. Since then, I would say we've sort of slowed down a little bit on the financing front. Markets are still certainly not buoyant for the most part in the junior mines, and they are the leading explorers. So, the financing markets are still relatively, if they're not weak, they're not strong. And until we get, stronger capital markets, I don't think we'll get the exploration, which really sort of drives the whole train. And we need to have a lot more exploration to really push the agendas forward, whether it be finding more battery metals and being more grain. We need to get out there and make the discoveries and bring them into production.